Hi, everyone, and welcome back to another show. My name is Tyler, and I'm here with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to demo a variety of ways that you can use the historical options data from ORATS to improve your trading. Matt, do you want to share a screen and get us started by going over our positions from last week?
Sure. Thanks, Tyler. Yeah, so we just did a AstraZeneca trade, and it's still open. So we bought a call spread and just a regular call. We saw a lot of activity in the stock, and stock's about unchanged. So we're down a little bit on decay, but we're holding tight, Tyler. This is kind of a shot that we took. If it breaks out, we think we're going to be in good shape here. I should show. Here's the long call spread in the trade builder. Kind of shows where the break even is up here around a little over 70. So not too far to go. What are we talking about, Tyler?
Great. So this week we're going to talk about all the different ways you can use historical data, which ORATS is known for. We have end-of-day data going back to 2007 and 1-minute data going back to August 2020. And there are three primary ways that you can interact with the data, and that is through our dashboard, which we demonstrate a lot, and then through our APIs, and then also through our historical data flat files. So we're going to show you all three of those today, how you can use them, how our successful traders using this data. And then we'll also go into a little bit of an explanation about our process for calculating some of our theoretical values and other popular indicators within the data.
Yeah, thanks. Yeah, so the ORATS dashboard, our online tool, is built on top of our API. So all the data behind this is available in most cases for purchase and subscription, including these earnings dates. So we'll just start with that since we have AstraZeneca on. So we have an earnings core file that has all these implied earnings moves and the actual moves and these types of things. So back to the trade builder, again, just staying on AstraZeneca, you could notice that we have implied volatility, 30-day, and historical volatility. The blue is the implied. The magenta is the historical, and then we provide a couple different calculations, close to close, and then open, high, low, close, a modified Parkinson, which interestingly was the most accurate one that we found. We used to do tick data estimations for volatility back when I was a market maker and had a trading firm, and we would simulate a gamma position and turn that profit into a volatility. And then we noticed that the way that we modified an open, high, low, close Parkinson was a very good estimation and wasn't nearly as difficult as the tick data, especially when tick data, there's so much that you had to ingest. So we moved over to that. So that's the historical data. We have, of course, that all historically. And like Tyler said, you could go, this is our API console. We have live data now. And then I should mention that we have live derived data. So the derived data is great for people making platforms, new people coming into the industry and professionals. Since it's all derived, there aren't any agreements that you have to get with Oprah or the other exchanges. So we have derived option prices called our SMV, our smooth market volatilities. And we have all the implieds and all that. So I'll go to my chain to kind of show you what that means. So this orange line is how we summarize the implied volatility and make a theoretical value. And then we're able to present the implied volatilities essentially everything except for the prices and the volumes were in a derived fashion. So, and then the stock price we're able to figure out from a put call parity. So put call parity is, adding up the call, taking away the put, putting in dividends and interest rates and the strike price, and coming up with a parity price that is implied by options, and we could get reasonably close to the actual price. So, again, it's to be able to have a reasonable representation of the market, and again, it's less expensive than having to register with all the exchanges. And then, eventually when you get more and more clients, you could register with the exchanges, get all of the data. Okay, so far, Tyler?
Yeah, so just to clarify, this live derived API, it's live data with everything except the bid ask, price, size, and volume. And this is specifically designed for pros and platforms that would otherwise have to go through exchanges and regulatory authorities to, pay thousands of dollars a month for this data. But with ORATS, you can get it in a derived fashion and get pretty close to, I mean, it's a good enough offering in our opinion with this SMV price. So,
well, yeah, good enough for certain things, right? So, like for example, we show the SMV, but we can't show the bid, mid, or ask. But if you look at the SMV 126, it's actually 125 is the midpoint. 82 cents is the midpoint. 65, 50, 49, 30, 18, 18. So it's pretty good. And in a lot of cases, it's better because in some cases, this 75 is 1 cent at 10 cents, and we're saying, well, it's only worth 1 cent. It's not really worth 6 cents. So, a lot of cases, our SMV is a better representation of what the actual value of that option is. So,
yeah, that's a good point. I mean, there's a lot of people who use the SMV price, traders who use it within the dashboard or with the APIs and use it algorithmically because it's a better representation of the true price. And you can read about how we calculate it on our university. So, the exact calculation isn't public, but you can read about our methodology and practices and, things like that on our website. So we're very transparent about how we do it and how we calculate the derived price. So yeah, right there, ORAT solution. There's a lot of places that we mention it really.
Yeah. So good point, Tyler. And then, for example, like I just pulled up this trade. So a lot of people would just go, okay, I want to trade this. And if you see down here, the actual value is 1 cent SMV, but the price you might put in there 6 cents, and they would happily fill you midpoint here because it's not really worth that. So that's one thing you have to be very careful of as a trader. And one of the most common mistakes that I see for new traders is not really having theoretical value to trade with, and it really does cost you.
Right. So I want to talk a little bit about some of our other APIs while we're on the subject. So what we were just talking about was the derived offering available for pros and platforms. We have other APIs for retail traders. So if you're looking to algorithmically trade or build machine learning models, we have an API that can access that historical data in a REST-based API. And we also have live APIs that you can get as well. And you can get those by signing up with. We have very easy sign up forms that gets you compliant to do that. So we have something for everyone, really.
Yeah, and the agreements themselves come right out with Oprah if you're a pro as well. It did a nice job designing this, Tyler.
Thanks.
All right, yeah. So we've talked about we were talking about AstraZeneca. We talked about implied volatilities. We talked about these are the implied volatilities at each expiration. We talked about earnings data. I think it might be good. Actually, why don't we go back into that option chain and look at that? While you were talking, I wanted to show, so here's that really wide option. What we could do is we could look at the trade history. So trade history is cool because it's every minute how this trade has looked, right? So, and you'll see that, like, what is this green stuff, right? So the green stuff is saying, well, this midpoint, it's only worth 1 cent. It's not really worth and this is selling it. So, imagine buying it. But actually, it'd be easier to look at right this way. So, we're able to say, well, it's saying it's 0.55, but really the SMV is worth 1 cent. So it's overvalued here. So you can see that in there. So that's neat to see. And you can see that it's been overvalued for a while. And then you could go back in time, and you could go back in days and set the range and everything. So that's a really nice feature. So that's our trade history. You can pull it up by just pulling it up here, or you could click through. It takes whatever trade is in the trade analysis sidebar.
Yeah, I like using the trade history to just understand what happened to my trade. It's almost like a makeshift trade journal, which we get asked about trade journal a lot. And we don't have it available in production. We actually got asked this today. We demonstrate it here on the Tradier Hub a lot, but it's not rolled out to clients yet. So
to be clear, trade history is, and we're working on the trade journal as we speak. All right, and then what I'd like to talk about, we've seen time and sales as well, so that's really neat to see that, like, the big trades. I think if we went back to last week, we'll see some big time and sales, because that's what we were riffing off. And one of the reasons that we traded is because there was a big trade in AstraZeneca that day. So that the time and sales is really neat. When we have an overall time and sales for all stocks. So the largest amount was a $38 short straddle, sold 3,000 times. The trade amount was 12. They took in $12 million for that. Pretty nice little take in. And then I like to go contracts minus the open interest. So we want to see opening trades. I tend to ignore a lot of these flex trade looking things, and so I would look at AMKR, and so they sold a put in February for 29 cents. We had it worth 37 cents. So that's a lot of edge that they gave up to trade. So you'll see that most people are giving up edge to trade these, and we know the size usually. So, and then our edge is based on that smoothing that we talk about, Tyler.
Right.
So I'd like to look now at the signal builder. We talked about. So I look at this. I know it looks a little messy. Let's see if I could take these off. I'm going to take off. So I'm looking at the implied volatility of the 10-day, and then I have a 22-minute smoothing and a 55-minute simple moving average. So I like to look at these and see, is there, which way is vol going? Because the stock price is usually going the other way. So vol just kicked up a bit, but it seems pretty mundane, meaning there's not much gap. When there's a gap, that usually means there's some movement going on. So as vol is falling, as shown by the blue, which is the 22, and the red is the 55. So when the 22 is falling and underneath the red, that's usually pretty bullish, and that's what happened for most of the day. And now it looks like it's getting weaker, Tyler. I better get out of some of my deltas soon.
Yeah.
But it looks like I like to get more of a conviction, but it does look like vol's going up, and stock price might be coming back down a bit. So again, the neat thing about ORATS and the neat thing about the backtester signal builder is that you could see on a minute by minute basis, we're continuously updating all these constant maturity, implied volatilities, relationships, just in some pretty contango, pretty telling data points that could help you trade intraday. And you could, now you could download these, live and create signals. And then we're always working on signals. So hopefully we'll get this signal builder integrated in some type of webhooks in the coming months.
Yeah, that's yeah, thanks. I think just to stay on track with the episode, I want to show the API side of this and the historical flat files side of this. So the signal builder, it's actually built on top of our APIs. So when you could essentially develop a similar thing, and those APIs are built on top of the flat files. So however you want to download the data and use the data, we have different ways of doing it. So Matt has the live data API pulled up here. We get the intraday data from the historical intraday, which is the far right tab.
Yeah.
But yeah, I mean, you're looking at the response field in there. It's all the implied volatilities are in there. All the hundreds of indicators that we have. So
yep. So back to the signal builder. So the signal builder, it's at what is it, 13.6 for the IV10. Now it's like 13.7, so it's right around there. And that's in this file here. This is live. This is at the end of every minute, and this is just live, right now.
Mm-hmm.
You copy that out. So it's so yeah, you could recreate all this data by using these RESTful APIs. So that's really awesome. It's great. We're on AWS. We have some great programming team that just like pulls these calculations out, and we even got designs of getting them faster and faster, Tyler. So we'll be working on those as well.
Yeah, it's exciting to see all this good data getting faster and more methods of delivery for people. Like you don't have to be, a programmer to use this data. You can just, browse it in AWS, in a flat file format,
Right.
or you can use it on the dashboard. So the power of ORATS data can be used in a lot of different ways. And, we, like Matt said earlier, we recently expanded our API offering for platforms and pros to use derived data. So we're just continuing to expand the offering and getting you more access to different types of data.
And, we don't, it's hard to support an Excel version of it, but this is, I'm dangerous enough in Excel to get, data in, and then I could write macros and bring them all in. So, I do a fair amount with the Excel API, which you could download as well. My programmers don't like me talking about it, but we keep it out there for people like me that are more VBA and Excel based people. But speaking of Excel based, you could download CSVs and get all this information from just a FTP, and using things like FileZilla, you could go get all this data on from our servers as well. So we try to make it as easy as possible. This is that near end of day data, 14 minutes before the close. We snapshot it then because the markets are still relatively tight. Whereas as you get closer to the time of market close, then sometimes you'll see the markets widen out as the liquidity kind of the underlying kind of dries up. So that's the reason that we offer this kind of near end of day data. So like I said, all this information, strikes, and the core data is available on FTP as well as the APIs. And our documentation is very good. You could go there and check out how to get at these things. And then if you sign up, there are trials, and we give you a token, and then you're able to get in and get going very quickly. So it's pretty neat.
Real quick, Matt, I want to show how you can download samples of historical data. So we get asked this a lot. People want to see the data. Just go to the university tab at the top. And then on the left-hand sidebar, down a few chapters is historical data. I think it's 204. And right there, you can download the near end of day sample. It kind of, explains how you can use it with FileZilla there. And then if you scroll down further, there's options for the 1 minute data and 2 minute data there as well. So you can download all the samples just from that web page.
Yep, and there it is.
Yeah.
And it's like almost 1 million rows or something. So it's pretty incredible.
Yeah.
Cool. Anything else that I missed on any of this, Tyler?
No, I mean, I think we covered a lot. I think we, obviously at a very high level, we could talk a little bit more about the SMV price. That we talked about that already, but just maybe a little bit more detail on how it's calculated, the different things that we bring into the calculation, like interest rates and dividend assumptions and liquidity concerns, hard to borrow, all those kind of different things that we bring into this calculation that you would otherwise have to do on your own, but we provide you with, with the data.
Yeah, that's a good point. So, so in order to do all these calculations, we are continuously running a put call parity to really figure out what the actual price of the stock is and if there's any hard to borrow. And what that means is the premium in the call and the premium in the put on the same options should be the same. And if it's not the same, then you likely have an error in one of your assumptions, either a hard to borrow assumption, interest rate, or dividend. And so the first thing that we do is find out what that value is, and then we're able to, draw these curves through all of these points right here. And what that does is that gives us a highly accurate at the money volatility. We looked earlier how the SPY, how the SMV, which is our smooth market value, how that matches very closely what the mid price is, and it's within the bid-ask spread, I think, over in the high 90s, 97, 98% of the time. And when it's not, it usually means that there's a mispricing or a bid in there in the market that they haven't cleared out. So, and as you said, it could be very effective for algorithmic trading. Again, we're calculating these very fast, and you could see when there's a bid or offer resting in the market that is off from the market. So the SMV does a really good job of comparing all these to other strikes in the same month and other months. And so you could see where the volatilities are very accurately. Some of these other programs that I use don't have very accurate data, even like Thinkorswim and some of these Fidelity I use, their at the money volatilities aren't very good because they don't go through this whole, summarization techniques. We use all the strikes in order to get an at the money volatility. So we do quite a bit, Tyler, in that SMV, and we do have a bunch of explanations on the site in our university, and a fair amount of YouTube videos and blogs on it as well.
Yeah, great. All right. I think we covered a lot of the different types of ways to use ORATS data and the flat files, the APIs, and the dashboard. Is there anything else you'd like to cover today, Matt? Did we get a trade going?
We didn't do a trade yet, did we? Let me think a bit. So what do we got? A year end, and let's go to market intelligence to see what's going on. These are our top movers.
Let's look in the ETFs tab. I know we added that somewhat recently. It's a lot of people using our platform trade SPY and SPX. So, I think it's important to look at that.
Yeah. So what we're seeing here is that UNG is up quite a bit. I think there was a deal with Ukraine and United States and a bunch of stuff going on there, and that's helped the whole energy sector. Silver's down, and the Qs are down more. Like the darker red are the ones that are moving the most, and the darker green are there too. Let's check out TLT. I'm thinking that I'm a little bullish on this, so I think it's at the bottom of its trend line. It really got beat up. I'd like to do a long trade in TLT. So the way I like to do that is go to the option scanner. I have a scan. I have a scan that I set up called Get Short and Get Long. So actually, Get Long
TLT. On TLT.
Yeah, it's already there. So I've already wanted to get long TLT. So let's see if we could find, and so we rank these based on our distribution. We promised that we talk about these theoretical values a little bit. So D is based on the expected return calculation of a distribution that we make using the underlying symbol. I know that's a mouthful, but that's what that is. The forecast is based on weighting a few different types of ways that traders try to forecast the next 20 days of volatility, including momentum of volatility, what historical volatility is, and where the percentile is. So that's how we do a forecast. Smooth is that's the SMV value versus the actual. So I don't really weight that very highly because you want to be around. If it's too high, you're not going to get filled. These are the numbers. SMV, the market makers pretty much know that. We do such a good job that we match the market makers. And then we have probability of profit and reward to risk. Those are both related. So I want all those factors to help me find what I think is the best trade. And so it likes this long call. It's right near the money, 70 cents. It's got something like 9 days left. And even though it's got a negative distribution number, a lot of other ones do, it's got a positive forecast. And the reward to risk, 6.3 to 1, and a probability of profit of 30%. So based on all those numbers, this one weights higher than the one before that or the one underneath that. Probably reward to risk.
The interesting thing here is because we've, boiled all this down to, metrics like theoretical values and probability of profit, you can compare wildly different strategies to each other. Like we're comparing a calendar to a back spread to a long call. I mean, that's pretty impressive. Like the ability to rank all these different strategies all in one place and just find the best one. And this would take you, if you were to do this manually, this would take you hours.
And they're pretty close. It's like, if you change one of the rankings, you'll likely move the order quite a bit. So why don't we do this, Tyler? We'll do a little bit of an experiment. We'll experiment between a long call spread and a long call. And we'll see which one. They're both about the same price.
Yeah, real quick, that distribution percentage, that changes based on your outlook, which you can set above. So if you are bullish, I'd recommend, maybe setting that outlook to something, right?
Yeah. So bullish by that's going to move everything a lot because look at the distribution now.
Yeah. I mean, but that's important, right? Because you want to make the best trade based on your outlook, So.
Yeah. So that's a good point. So how much are we bullish by, right? So, it's 80, if it goes up, if it goes up to 90, that's like 2%, let's just say. So then we would go back to the option scanner, and you have to be careful because the bullishness really gets affected by the days to expiration. So, and you can put in a custom one in of 2%, and then that kind of tames these distribution percents. But you're not going to get many. Look at the short put spreads have shown up. That's an interesting trade. Wonder why those weren't there before, but so then it really actually, what we'll do is let's just compare, that trade, a little more out of the money trade. So we'll simulate this trade. So you're paying the offer. So we'll do that in our paper trading.
It's interesting too how the distribution. It's hard to see, but those little tiny. It's almost like a bar graph behind the payoff analysis. Is the distribution percentage visualized, and can kind of see a little bit more clarity into how that D% value is calculated.
Right. And now what I'll do is I'll take this out, just make it neutral and see which one's the best one. And now that short put spread has come in. So we'll do that one too. And I'll force it there. So we filled on that one. We're not getting filled on this one, interestingly enough. Let's see what happens if we move it up. And then maybe we'll do one more, Tyler. We'll do that call spread if it's still around. Yeah, there it is. 70-cent call spread. And we'll force that. All right. Let's see what's up with this. I'm not sure if we could now move it to a force. No, you can't. So I'm gonna cancel that for some reason. Our not filling us on the HN. Let's go back. Now that call's out of there, but we could, I'll go down to it. All right. Now we got some action, Tyler.
Yes. Is that 4 orders filled on TLT?
Yeah, this was another trade that was done earlier, but don't forget about that one. That was for a different thing. But we did a put spread and a call. So we did three trades.
All right. Well, excited to see it. Next week, and we can look at the trade history and see how the values change, and maybe open up some different windows and compare them, and it'll be cool.
Yeah. Good show, Tyler.
Yeah. Nice job, Matt. Thank you guys for watching. If you guys have any comments, leave a comment below in the YouTube comments, or you can email us at support@orats.com. If you're a member, we also have a community tab inside the dashboard that we check every day, and you guys can ask questions there. But yeah, leave a comment, like, and subscribe, and we'll see you guys again next week.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.